Good evening, everybody. Welcome to Even Markets. I am your coach, Tim, of Advanced Kingdom TV. Good to have everyone on. Thank you, everybody, for joining. Good evening. Good evening, Kamika. Dr. Ann, good evening. Good to see everybody. As we get going, remember to hit like and subscribe. Share it with someone. And it's good to be here. Good evening, Dr. Denise. All right. Got a few things up, moving a few things around. Good evening, Paula. Good to see you. Good evening, Kingdom Trader from the Philippines, huh? Good evening. Good to see you on. All right. Good to see everybody. Let's go. Let's go. Let's get started. Father, we thank you for another opportunity to glorify your name in the markets, that you have given us this. And so we're in expectation of there is an endless supply of wisdom, wealth, knowledge that we are able to extract in these hours. This is the redemption of time. And so we're believing you for it. We're believing you for the increase. And for this, we give you praise, honor, and glory, knowing that your word is yes and amen. And so we thank you for that. Be with us tonight. Speak through us. Whatever needs to be said, allow it to be said. Let there be a liberty in the spirit realm. Allow us to have free access and free reign under an open heaven tonight, that we may see great success and forever praise your name. You are the God that hears. You are the God that guides, and we are your sheep. We know the master's voice. And so when you speak, we are aware and we respond. Have your way tonight in Jesus' name. Amen. All right. Welcome to Evening Markets. Good evening, everybody. As you come in, say, hey, Corey, good evening. Dr. Lakeisha, good evening. Michelle, good evening. Good to see everyone here. I posted this in our Discord just because that 7 o'clock candle was moving a little bit. We analyzed Nikkei for a bit. And so I just want to talk about, this trade that we're currently in and why we're taking this trade. And I want to do that via the top-down analysis that we normally do in the night markets. All right, so who is all in this trade right now, or who saw the Discord chart and got jumped in this trade, or was watching this candle at the 7 o'clock hour? Yeah, we've been getting hooked up with the music, so yeah, I really appreciate Zeke for coming through with the music. All right, so let's do a top-down analysis. Remember, we go pretty quick. This is going to be habitual when we jump on these evening markets. It's a time to learn. Markets move slower, so it's a time to learn, how we're moving in the markets, why we do what we do, while the markets move a little slower at this 8 o'clock candle. But we talked about last Tuesday. We talked about we made money last Tuesday. We talked about top-down analysis and the importance of it to know where you're at in the structure. All right. And so it's important to know where you're at in the structure and why we do what we do. Yeah. I posted it in the chart, in the chat, in the Discord late, just because I knew when we got on, price would have moved already. So that's why it was posted late. We may have an opportunity if it comes back up. I moved my stop loss to break even because I'm prepared for it to come back up and maybe give us a double top, and then we can look at it from there. But let's quickly do a top-down analysis. Let's just jump to the month and see where we're at. So month isn't really giving us anything. This is from last time. It was high, low. We're trading in the middle of that range, and that's where we're at right now. Going down to the week, you can see on that month really quick on the TDI, it is high. It needs a healthy retracement, but it's starting to peak back up and getting exhaustion. Okay. Week, we're in this consolidated period. On the week, we see the double top, the retest actually hit this area 3 times, fell down, pulled back. So that's really the retest of this retracement. Now we've been in an upward movement, and so these retracements haven't really been long lasting. We really need to see this area broke, and we're far from that area right now, and we're at a critical area. We'll see that on lower time frames. But now when we jump down to the day, you can see that consolidation that we're in. So yeah, we're printing some higher lows, but those are being capped up here. So we've had multiple touches at this level and been getting the rejection. Those rejections have been pushing us down to the trend line. Potentially, we're asking the question, is that going to be the target? Is it going to push down? So we've already touched this. We've already tapped that trend line, and right now we're in the middle. So we can come up and retest this, or we can come down and do that. That's what the higher time frames is telling us. We're not really aware of which way it can go. It can go either way out of this consolidation period. So that's what higher time frames are telling us that we're paying attention to. Okay, so now we get down to the 8 hour, and I'm just going to jump quickly down to the 4 hour and just look at, just the tapping of this trend line. That's really what we're looking at, is that when we get these test resistance level, it's pushing it down to the trend line. So we came down to the trend line, and then last week we got an inverted head and shoulder. That inverted head and shoulder, left shoulder, head, right shoulder. We measured that, and that put us going back when the break of the head of that shoulder. We said, well, on the breakout of that, we could potentially start heading back up to retest this top. All right, so that's still the idea, is that we could potentially come up and retest this top. But as that's going on, something in between that move, because we still think that move is a possibility, that we'll be up here, but in between that move, there's something that's happening. So we jump down to the hour, and what we're seeing is that we're constantly getting resistance on this level. So price hit the trend line, came up, rejected off that trend line. It did produce a higher low. All right, so it is producing higher lows, and we got to be cognizant of that. Is that it's a higher low here, there's a higher low here. All right, so we got to be cognizant of that. We're producing those higher lows, but at the same time, we're getting resistance, right? So that has to be rejected. You can look at this long wick on that 7 o'clock candle that came down. We sold off of that, and that's actually where I got in. We've been selling off of that. This 8 o'clock candle is on, and so we potentially could be pushing down at least to retest some of these lower highs. All right, so that is a possibility that we could be coming down and retesting that, and having an idea off of this interim liquidity level and just pulling up just a little bit above that and taking it down to the trend line is a significant drop that potentially could play out throughout the night. All right, so that is the top-down analysis. Now that we're at the hour, when you start to go down lower than this, and price is going to get a little crunch, so I'm going to move this up just a little bit, just so we can evaluate TDI. When you start to get up into this liquidity area that we spiked up to multiple times, when you start to get up there, you start to recognize the divergence that's there. All right, so I'm going to jump down to 30-minute, and price pushed up. And you can see the divergence from peak to peak, and we're pushing up higher, right? And so that's the signal that we are coming down from there. And so now, these are playing out to the 50, so we're getting that rejection. That's fine. When I turn on the session anchored VWAP, we've just crushed through that, and now that's acting as resistance. You'll see that I'll leave it on so you can see it as we get lower. And then you have this, the rejections here off of this liquidity level that are producing divergence on the 15-minute and the shark finning. So shark fin divergence on the 15-minute, and the 15-minute candle is still coming down. So that lends to the sell-off that's happening right now. 5-minute, it was the same divergence that we were seeing, and it was happening at a liquidity level. And now we've hit the bottom of the band. We're looking for that band to open up like it is and continue to come back down. So that's really the lowest that I've been going. We can look at 3-minute. It's not going to really tell us much, but you can see that we're still wanting to come down here. And so we have this trade open. We're trading it from the top, and it was a 7 o'clock candle. Now, what I want you to pay attention to, I'm going to come out and I'm going to take some questions and stuff. So just keep up your questions as you have them, because this is an opportunity for us to learn while we're on the charts and how to evaluate these evening segments. But I want to show you something that's very interesting. If you're evaluating, we meet on Tuesdays and Thursdays, but if you so happen to come on Mondays and Wednesdays and Fridays, or not Fridays really, because there's no evening market on Friday, markets closed. But when you come, it's important to look at kind of what's been going on with Nikkei, which is pretty interesting. We'll pull the chart here. So if you start looking at the candles, these evening candles, so this is the 7, 8 o'clock candle here. Let me pull this down. Stretch that, pull it down a little bit. Yeah, so that's a 7, 8 o'clock candle here. This is a 7 o'clock candle here. All right, and this was actually a 7 or 8 o'clock candle here. We were on the markets here. It actually pushed up and it became a 10 o'clock candle here. Over here, this is a 8 o'clock candle right here. All right, and this is a 7 o'clock candle. All right, so what you're starting to see is a pattern in the night markets is that you're getting a lot of trend of pivot points that happens at that 7, 8 o'clock candle on Nikkei. You can see the last few nights that has been a pivotal moment where it produces the high it then falls down. Produce a high, then fall down. Produce the high. This one's 3 hours late. Let me put that there just so you're aware. This was a 8 o'clock here that we actually lost on this one. This is one of the few ones that we lost on. So it pushed up higher and then pushed down lower. And then this was the last one was the 18th, Tuesday, where it pushed up, and that was the pivot that pushed down, right? So you can see that this is a trend that has been happening multiple times. A lot of these pivot points over here, if you just back test this, this is this is a 5 o'clock candle, so 7 o'clock is right here. No, this is 8 o'clock right here. On that one, you see the push down. Come over here. This is the 8 o'clock candle right here. All right, so, and then you see the push down. So you can see that multiple times looking left, back testing Nikkei, 7 and 8 o'clock has been pushing the reversal. There's only one time out of all of these moves where you have a loss, and that was this one here, where it was resistance. But all that was, when you back test it, it was old support that turned into resistance. So it was old support that we broke through, and we took it early here, but really it pushed up to 61.8 PRZ zone and rejected off of that, right? And so that's what lends to this. I'm looking to see if we're going to get a double top here. I'm not necessarily convinced that we're selling down now. And I think we're going to get the retracement. But if you look at the TDI, as it pushes up higher, and it will push up higher, could it be that we allow it to push up and we enter it into sales through the night? And what's the chances of it reproducing this, or 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 reproducing this? We have history looking left that normally during these hours between 7 and 10 o'clock, the highs are put in. And then once London session comes, then the low is put in. All right. So we have history that says that normally is what happens. And so that kind of creates a bias for us, because that's what's been happening when we find these resistance levels. All right. So with this, what we're having right now is we're getting the rejection. And I marked out this line just because it was a minor support. We were rejecting off of this before, and we haven't been able to close. And so now we're pushing up higher. And when it pushes up higher, what you want to be cognizant of in these push-ups is how the TDI moves with that. And so this is liquidity. We mark this out that this is liquidity up here. It's spiked up here before, pushed down, spiked up. And look at this, it spiked down. It spiked up first here, pushed down. And then what did it do? It pushed right back up there to retest liquidity. And that was the entry into the sale all the way down throughout the night. All right. So same thing here. Spiked up, grabbed liquidity, pushed down. Then what did it do? It pushed back up and then sold throughout the rest of the night. All right. So, well, this is actually during the day. And so here we have it now where we pushed up, we pushed back down. Now we're pushing up to grab liquidity. And then we should be pushing back down throughout the night. All right. So that's an evaluation of potentially what could be happening with Nikkei right now. When you look at the TDIs are kind of in support of that, the way that it's moving. And looking left, we have multiple times where that has been the case. All right. And so that lends to the efficacy of the evaluation. And now we're in the trade, and we can let this trade run. We have a lot of wick on this 4-hour candle. right? So this next candle could open up bearish and we can be coming down. And that's really what we're looking for. So I'm going to put my take profit in. We'll put that in as a limit order. And so take profit is right there, right? Do I think it's too late to get in? So let's talk about that, because I want to go over some pattern recognitions and stuff that we're looking for to answer some of those questions. If it's too late to get in. I don't think it's too late to get in, but I don't like the price where it's at right now. I like the price where I entered in at. And so price is pushing up there again, which is traditionally how it does it. Price rejects here, it pushes down, then you get this big momentum candle comes up, creates some divergence. That would be the place to enter in. If I was to enter in. Same thing here. This is hours, so you really can't see it. Let's go down to 15 minutes so you can see it better. But that candle pushes up, that 7 o'clock candle pushes up. The 8 o'clock gives you that rejection, and then it pushes down. Then it comes back up, retap it. That would be the place to enter into. You have an alert at 38,730. Yeah, let's see. Yeah, that's good. That's a good alert to have, because this is liquidity. I mean, you can see how it's going to get exhausted there. So yeah, that's a good place to have your alert set once it pushes back up. All right, and if it's just too, and you can do this evaluation. I mean, we do this evaluation a lot of times of what price is too expensive for you to take the turnaround. So that's something else to consider, is that you'll say how much is too expensive for you. Is from here, if the trade was like this, is that too expensive? It may or may not be. That's a 1-to-1 for 35 ticks. And these are full contracts, by the way, as well. You can't do micros on these. All right, so we're going to watch this one. Any questions on this evaluation before we start talking about patterns and candlestick anatomy? We've kind of already talked about it, but I'm going to explain it a little bit more. But any questions on this trade? On this trade idea as it pushes back up. Now, one thing to note is that we are producing this trend line produces higher highs. So here's the higher high, came down. This already has produced a higher high. It just hasn't closed, but it closed on the lower, produced a higher high. So this is the area of the higher high. That's where you want to take the trade. All right. Then we're coming down to the lower high. So that's the trade idea. It's counter trend on the, not necessarily on the lower time frame, but it definitely is counter trend on the higher time frames. Let me get rid of these. Just wanted to show those reversals that when you back test and start looking at what has happened before, just to give you confidence in what's happening right now. All right, so you see this long exhaustion wick, that this is liquidity, and then it rejects off liquidity. So we're going to come back up there, and we're going to see if we get the same exhaustion wick. But that is going to be the idea. We're still going to have the same divergence there, and we're going to see if that's going to come down from that point. All right, so what pattern are we in right now? We talked about patterns on the last call, right? So whenever we talk about liquidation, on the candlestick itself, we're looking for exhaustion. We're looking for long wick action. And then we're looking for engulfing candles, right? And so you see that this green bullish candle lost the fight against, really took about two red candles to start the fight. And then the third one came in and overwhelmed that one candle, and we came down to the downside. All right. And so it took a lot. it took 3 candles to get to that downside, but then it took 1, 2, 3, 4, 5, 6 green candles to fight these 3 red candles. All right. So when we talk about efficiency of the candlestick, you know, 1 candle can do what 6 can, or what can do what 3 candles can. All right. So that's an indication that there are some bears in the market that are pretty strong right now. Right. You look at over here. If you look at over here where liquidity was, and you just take it from the breakout, it took 1, 2, 3, 4, 5, 6, 7 candles, 7 green candles, 7 bulls to get to this liquidity area. Then it only took 1, 2, 3 bears to get those 6 bull candles. 3 bears took it right back down to where it was. So it's an indication that bears were in the market and price came a lot lower. Right. So that's a way to look at candlestick anatomy, the how those candlesticks look. Even though this is a green candle, it opened up higher than it closed, or it closed higher than it opened, excuse me. But you know, that run up for the rest of the hour, once it got to liquidity, bears pushed that right back down. Right. So that's a really good sign. Same thing happened over here. Look at this. It ran up to liquidity. You have a big wick that pushed it back down. So even though this next candle opened up and became bullish, look at what happened right after that. It's that sell off. All right. And so, like, well, how do you have confidence that price is going to reverse in this liquidity zone? Well, look left. That's exactly what it did. So it should do it again. It's going to push up higher. And then the bears are going to come in and push this down throughout the night. All right. So that happened for the last, I think, let's see, we have history since for the last 2 months. That's what's been happening since May. It's a September contract. So April and March is kind of distorted. So I don't have that much history to look left. But since for the last 2 months, that's what these candles have been doing. So I'm going to leave this here. I'm going to allow that stop loss to be hit. If it comes up higher, we'll take the entry up a little higher. But that is kind of what we're thinking about tonight. And, you know, in these evening markets, the price action moves a little slower than what we're used to in the morning. So it gives you that opportunity to look and analyze those candlesticks. So if you have the opportunity, make sure you're looking at those candlesticks. Now let's switch to pattern recognition, because we talked about the candlesticks and how the fight is happening. You know, you have this one bull candle, those 3 bears took it out, push price lower. Okay, you get that, but look at the pattern that it creates while it does that. All right, so when we talked about identifying the pattern on the last call, if you add that with candlestick anatomy, you're going to have be pretty solid on, and you can look at support and resistance, but you're going to be pretty solid on being able to detect entries and exits into the trade. All right. So we talked about this one last time. We had this sell off, and the reversal of that was this inverted head and shoulders. Right. So technically that is still in play. That's still what the market is doing. And that left shoulders here. This is the pull down to liquidity. Right shoulder is here. But where we're at right now is a continuation of this right shoulder. If I take this box on this pattern and I say, and just pull that over, this is all right shoulder action right here. It's just a range, but it's still the break. It's still the neckline of this right shoulder, right? And so we're still looking for, it hasn't closed below the right shoulder, right? And it hasn't broken above the neckline. So we're still looking for the breakout to get on top of resistance right now. The way that the TDI looks is that pattern is not ready to break out. So we're going to take the sales down and trade within this range. We like that 35 ticks throughout the night. That's still a good deal, but it's going to push up eventually and climb on top of that. So we're not saying that pattern is gone. We just know where we're at in time. We know that we're in the consolidation of this right shoulder that is forming, which is a reversal pattern, and price eventually will make it up to the liquidity that's up here. All right, so we're in time, and the only way to trade that inverted head and shoulder where it's at is to wait for the breakout and then wait for the retest of the resistance, of old resistance turn support. That's the only way to trade this inverted head and shoulder pattern. Okay, so does the inverted head and shoulder pattern have to play out? Well, more times than not, it does. And so you take that, once it breaks up above there, that's how you get to liquidity, right? And so that head to the neckline, you bring that over, it's the breakout of that neckline. That's how it heads to liquidity. Is it going to happen now? Well, there would need to be a lot of volume to come in and to counteract what's happening with this divergence that's happening. So it's okay to trade, even though you see the pattern. It's okay to trade within the pattern. The pattern is consolidating right now. It's building up the energy to get up to this liquidity level up here, right? It does that through sideways movements to get enough liquidity. And then once it builds up enough power, it's going to get up, or accumulated enough orders, it's going to break this resistance and get up to this liquidity zone on the higher time frame. All right, so we understand that. We're aware of that. This is where we're at in time. And so that's the reason why I move this to break even, because we want that to exhaust again and then catch it down to the bottom of that right shoulder consolidation, which is this trend line that's going up. We want to take it at least down there and then push it back up. So that's what we're looking for out of this trade, and looks like we're getting a nice price here. Now, here's another thing that we've talked about is that who's right? Is the sellers right, or if the buyers are right? Well, the question is, do you know where you're at in structure, right? And so if I know where I'm at in structure, I know that I'm looking for a retest. Would I be wrong to enter into buys going back up? Because we know that it's coming back up to liquidity. No, you wouldn't be wrong for that, as long as you know where you're at in structure, right? Once it gets up there, if it's bullish, depending on how it closed, would I be wrong to take it back down for the night? No, you looked left and saw all of those 7 and 8 o'clock candles close and produce these lows. These are all 7 and 8 o'clock candles that produce these lows. All right, so no, you wouldn't be wrong for that. And I would stop looking at it as right and wrong answers and really start answering, where am I at in the overall pattern of things, in the overall structure? Where is my price at right now? All right, so look at it from that perspective. All right, now going back to patterns. Okay. All right, so in this pattern, if we get the rejection right here, what pattern is that? And we'll have to go to let's see, a good, you can shift through this to see. Yeah, this is a good one. All right, to see it on the 45-minute. That's an M pattern. All right, so we were talking about this in the morning. It's a double-edged sword. So if you believe in support, you also got to believe in resistance. And so here's the support down here that we're in, and this is the neckline possibly being an M pattern. So we rejected here, we came down, if we reject here, that potentially could be the M pattern that breaks that neckline and pushes this further down. So the same thing. Yeah, that took me out at break even. Actually, slightly in profit. I left it down a little lower. But let's look at this. So for the bottom neckline to this, go there, move that down. So potential targets to potential resides if that is broken. And so you have plays for the upside, you have plays for the downside as well. All right, we're out of this order. One thing that you always got to be cautious of when you're, if your buy limit or if your stop order is hit, that it still leaves in your sell limit. So that's something to be cautious of, that you will have to go in. Now I know on NinjaTrader I can connect the two to where it doesn't where one will close out the other once it's hit. But on TradingView, I haven't figured out how to do it. So I'm still doing research on that. I'll report that once I find out what's going on with that. But for now, I'm manually doing that. What's up, Dumai? You made it in. Good to see you. Yeah. So what questions do we have tonight on this? How are we looking? I'm going to flip over to gold really quick because that was trending really well last night. More so just because we had a closed market from 12 to 5. And so a lot of those orders came in after. So it made for a volatile night last night. All right, don't close. I need you to come up a little higher on this retest. I wanted to come up a little higher. And we're going to take that sell out right off of that. Yeah. All right, here we go. Here we go. Let's see. Switch it up a little bit. Yeah, made it in. Yeah. All right. Let's look at that 5 minute. That may be a good opportunity to see how the divergence is. Yeah. The 2 minutes divergent right now. 3 minute and 5 minutes where I would like to see the divergence, but that's right around this liquidity area, which will allow us to get short here. And remember, this is the neckline, so we want to be cognizant of that neckline. Now, lower time frame, just pattern recognition here on this trade. You had some off of this trend line. You did have the reversal pattern here. Left shoulder over here, right shoulder down here, or head down here, right shoulder. We pull it top to bottom, put that on top, and that's how you got to the top here. Off the break, it broke here, came and retested and pushed up and touched the top of that, right? So that was the end of that reversal pattern on that trend line. What's the significance of the 3 and 5 minute looking at divergence? So there's no significance there. It's just wherever the divergence shows up. So when I scale down, I want to see at what time frame it shows up to, and that's the time frame I stop and make a decision. All right. So on the hour, we have the divergence now. So I really don't have to go past the hour to see the reversal. But is it going to pivot on the hour? Probably not. The hour has a little more room to push up. So then I go down to the 30. 30's not you can get that divergence on the 30, but the 15 minute is not divergent. So from here to here, we're not divergent yet. We're going to be shortly, but we're not divergent. Then I go down to the 10 minute, we're not divergent. So from here to here, it's the same. The 5 minute, we're not divergent yet. The 3 minute, we are just now getting divergence on the 3 minute. So now 3 minutes divergent, 2 minutes divergent, 1 minute's divergent. And I watch how that divergence climbs up the time frame. And so right now, a few seconds ago, 3 minute wasn't divergence. Now it is. All right. So now 1, 2, and 3 minute is divergent. 5 minute is not. Right. And so now we're going to wait for a few more seconds for the 5 minute to turn divergent, and then the 10 minute to turn divergent. And once we start getting that confluence, the 15 minutes going to turn divergent. 30 minute is already there. Right. And so once we get that time frame confluence all lined up, it sort of gives you confidence that, okay, now I can probably get into the sale. So it's just waiting on that to occur first. What's the lowest time frame you would put a fib on? As low as you want to trade on. So if let's say it's let's say markets is barely moving, I'm just trading range low to range high, then I can be down in the 1 minute and trading, this right here. So I could put, a fib from here to here just to see where the lower time frame is going. Right. And so it all depends. It's like every case it depends on the situation. Like but I will say this, the higher the time frame the fib is, the more trustworthy it is. But fibs are used for trending markets. So if you find a trend on the 1 minute, like this is a trend, then you can put it on on higher lows to project a higher high. If the market is not trending, you can't use the fib. And so wherever you find a trending market, you can put a fib on. But the higher it is, the better it will be for you. All right, so let's see if this plays out. Can you draw the divergence? Yeah, I'll do that pretty quick. All right, so where did we say? We said 3 minute had divergence. So let me pull this so you can see it. All right, so we said 3 minute had divergence. This is from peak to peak. Remember, you're looking for peak to peak. This is the closest peak here. This peak is definitely lower. Over here, peak is higher. All right, so that's the divergence. 2 minute, same thing. Peak is higher. It's definitely lower here. It's signaling the reversal. Definitely lower. 1 minute, definitely peaks are rising. Over here, let me bring it over here. All right, so and here we're definitely lower. All right, so we're just looking at peak to peak, looking at that divergence from the indicator to signal when that reversal is, and we can find that on 2, 3, and we're waiting for it to find it on the 5. On the 5, it's not there yet, so we're going to wait for this 5 to exhaust itself, and then I love to have the 15 minute exhaust itself too. Right now, the 15 minute is already divergent, so we're going to get some wick action. And the second move, because we've seen this before, I'm going to go in a little heavier. Then before I had one contract on, made like $100 on that. And I think I mentioned on some morning calls how I used, those $100 as pawns, that I'm willing to sacrifice those in the break-even scenarios. All right, so now we're getting the 15 minute divergence. You see how fast the TDI climbed? when we jumped up here. And so that tells us that there's pressure to the downside, that TDI climbed really fast. And so now we got the divergence on the 5-minute. And so I'm going to enter in. Would love to see a little bit more exhaustion. I mean, we have, would love to see this a little more exhaustion on this, but that is where we want to enter the trade. All right, we know it's going to push up higher. We don't want it to push up above this, but I think we're going to take the risk right here. And let's just do one contract at this level. So I entered in right here. I'm going to pull this down. And let's figure out what this means. All right, so this trade box is what's pulled up here. I have one contract on. So that one contract right now, I have $400 that I'm risking. All right, to make $1,300 on this trade. Really not any risk on that. You know, it's 0.16 of the account is being risked. So really not a huge deal, but I put it there because it hasn't really proved itself. But yeah, look at that. It's like, it's the way to catch the top of that, you know, of that move. It's the double top that's there right now. It's the liquidity, but we have to be cautious of if it breaks this level and comes higher than this over here, and then also this right here. If it comes higher than that, then we really wouldn't want it. But it's a great way. Remember, I got stopped off in profit around here. I think around here somewhere. I think I was like right here. So I just got a little better price now by allowing it to break even. So let's do the same thing. Let's see if we can break even if it wants to push up higher. Let's put a stop in. All right, let's put a stop in at break even. And so now it's a risk-free trade that if it runs down, that's a great night. So we can walk away from the chart. It's at break even. Could we have caught the double top on this? And just based on what we were waiting on, is this the double top that we've seen happen at the 7 o'clock, 8 o'clock candle for the last 2 months? Is that going to be the double top there? Right. And so we are in. All right. So we'll see how that plays out. You know, that we'll see how this one red candle on the 5-minute, how many green candles it takes out. Good job on creating this YouTube. Everything looks smooth and inviting. It screams positivity. Yeah. It's a kingdom thing. It's a kingdom thing, new mind. So we have to represent kingdom in everything that we do. But appreciate that. Thank you for the feedback. Yeah, to God be the glory. Praise God for what he is doing. All right, who is in on this trade? Who got in on this, on the sell down, the retouch of liquidity? Who's in on this one? This is a great sell down. We like the way this red candle is moving. Yeah, Mia's in on it. Good. All right, so yeah, it looks like we caught the top of it. Yeah, and so we got, it's a break even. Dr. Ann got it in late. Okay. Oh, you walked away for a second. Yeah, it came up, hit that, and now we're getting that sell off. And so that's the double top right there. And look at that. That one candle, just on anatomy side, that one candle ate up three candles. So one red candle took out three. Right. And so you talk about efficiency of the bears, where the bears is getting more territory in one move than multiple candles in the green side is getting. And so that efficiency of the candle tells you that there are more bears in the market. You're not in because you took the buy, but love the setup. Yeah, that's good. You took the buy, and you don't want to give back those profits. So I completely get that. Like that's don't want to give back profits that you've made. All right. No, this is good. I'm glad everyone is in or had an opportunity to get in. And that's what I love about slow markets is that these evening markets, like it does a slow crawl up to your entry and gives you time to think about it, and then allows you to get in it. It was a slow crawl up. All right, so now we're paying attention to see how far it'll go down. We're paying attention to how the TDI moves. So how far do you think it's going? Yes, it depends on how the TDI is moving. So we got divergence right here. We know divergence plays down to the 50. The 50 is right here. All right, that's right around, I think, where that I think that's right around where the session anchor VWAP is. So at least down to here. But just look at this red candle, how efficient it is. It's eating up all of those green candles. Green candles had to work hard, and one red candle comes and eats it all up. So, and we saw at these hours that it sells off for the rest of the night. So looking left, it sells off. So this is one of those ones where I would just put it at break even or slide it down to where you're comfortable with it and go to bed. Just let it run. My take profit is right at 38, let's say 38,520, and just let it run down. And or we may just close it out tonight. We may just close it out at the 50, at the 15-minute 50. Yeah. Then you have hour divergence that's a little bit lower. So there's a few areas where this could play out at, but let's just say the hour 50. But this exhaustion on the hour, just look at this. Like, look at those exhaustion candles from here. That's the hour. This is the hour. Like, apparently it does not want to close. And so if the hour closes bearish, this is something where you can extend your stop loss and let it run for a little bit, because this neckline may get broken and continue to fall down. All right, so it depends on what your tolerance is for this trade. But I'm fine with it breaking even. I like the way that this candle is looking. I know it's going, we got to give it room to breathe, but we do like that sell off and coming down to the trend line. So I'm going to let mine run, and could have closed out with 500, but I kind of, anything under 1,000 is like my pawns in the game of chess. Those are the pawns that are going to work. Let that breathe. I'm fine with losing the pawns. Right now it's risk-free, so just let the trade run. Let that next candle open up, and then just let it run. If it's going to run, just let it run. If not, that's what happened more times than not. All right, so we're getting that rejection off that 5-minute 50. There's no divergence there, which tells us that we're probably going to end up breaking that and coming down lower. He said, I was waiting for the analogy of the night. Yeah, you know, I got him. I got him on deck. You got to be able to, there has to be a picture for it so we can explain it. All right, so this is a retest of this area right here. Trades like this, when you come in the night, let's say you're on a Wednesday night, we're not trading together, you're trading on your own. When you put in this trade, you do your analysis. I would walk, morning fast markets were down to 1 minute, 3 minute because of price action. It moves very fast. But in these longer runs, I would come up to the higher time frames. Just look at the hour and say, okay, that divergence, it has a lot of ways to fall, and just walk away from the chart. Just let it breathe and walk away from the chart, right? Because in the slow markets, these lower time frames are good for entry, but they're really not. They really can fool you when it comes to exits. So you've marked out from the top down analysis, you mark down where you want the profit to be. So just let the trade run from there. But no, that's good. Hey, Ruben. Yeah. Yeah, that's good for tonight. I mean, this can go two ways. It can hit our take profit or it could break even. I'm going to let this run. I'm going to be up for a little bit. So I'm going to let this run. And so I'll probably come back in about an hour and see where price is, and then judge where my take profit's going to be. Right now I have it at 38,520, but I may move that up or I may extend it down, just depending on what happens in the next hour. So no, good call today. We're approaching the hour. Good questions. I hope all of the questions were answered. Tomorrow we got Terrace and New Friends at 7 a.m. He meets on the first and third Friday. So Terrace and Friends tomorrow at 7 a.m. It should be fun. All the new friends, we get to see the new traders trade and get to get feedback on their analysis. So I think that's a great way to learn. If you're new, or even if I enjoy it because I see what they see from their eyes, from the new eye, and get to see how I can critique and make adjustments in my own strategy. So that's a very impactful segment, Terrace and New Friends. Hopefully we see you all in the morning, 7 a.m. Now, with Terrace and New Friends, they have music that we haven't even heard yet. So they'll come out with some music and it becomes a whole vibe and it becomes a party. So I love that Terrace and New Friends piece. Oh, he said he needs 2 more volunteers to come up. So if anybody is brave that wants to come join Terrace on Terrace and New Friends, reach out to him and come up in the morning. I'm not coming up because I want to sit in the audience. I want to crack jokes in the audience. I want to laugh in the audience. I just love being in the audience on that Terrace and New Friends. So yeah. All right. So okay, Dr. Ann, you're gonna be on with Terrace. Cool. No, it should be fun. They've been scared. Yeah. Don't be scared now, y'all. Come on now. We need the brave ones. Who's gonna come? Who's gonna come? All right. Well, we're at the 9 o'clock hour. Thank you everyone for tuning in. We'll be back on the charts tomorrow at 7 a.m. for Terrace and New Friends. And go tell somebody, go bring a friend. Oh, this is the thing. We are at 197 subscribers. So we're 3 subscribers away from 200. And so we're going to celebrate when we get to 200. That means that the message of the kingdom is getting out and we want to celebrate that. So go tell somebody about Advanced Kingdom TV and everything that we're doing. But we will see everybody. Get some sleep. Let's wake up bright and early, 7 a.m. Central Time. 7 a.m. Central Time tomorrow, Terrace and New Friends. So it should be fun. All right, everybody. Thanks for joining. Have a good night.